David Blackborrow here, Senior Wealth Advisor at Builder Capital. Joining me is Christian Ryan, Managing Director, to talk a little bit about what's been going on over the last few months. Quite a bit has been going on. We normally provide the video update after the May budget, but we felt compelled to hold off until after the election. Probably fortuitous that we did because of the election results. So, Christian, aside from the political world, what's been happening in the domestic markets?
Thanks, David. Well, look, the key thing, I think, from out of the election, we've seen a couple of key things. One is, with Liberal winning the election, we've all seen a major bump to stocks like the banks, property stocks in particular. Franking credits are out, capital gains tax looks like it's off the agenda, and I suppose the world that was continues to be. So for us, from a domestic point of view, the Australian market's actually done really, and relative to the rest of the world, it's actually been a really good place. The other thing, I think, the two major beneficiaries in the Australian economy, which are the miners and the banks, have both performed strongly. I think before the election, the miners have been doing a pretty good job, certainly benefiting from the circumstances overseas with certain, bale mining shutting down and creating the iron price to go up. But from a domestic point of view, everything seems to be reasonably healthy. I think the other thing probably worth mentioning that's helping the share market, not only here in Australia but around the world, is interest rates. Interest rates, you can look at it in two ways. Does that mean things aren't going that well, or is it a way to help boost the economy? What we've seen recently is GDP numbers not being particularly great, so growth around the world has been slowing, and so Federal Reserve and governments around the world are looking to, or are decreasing interest rates. So we're seeing interest rates drop here in Australia the other week. It's the first time, I think, probably nearly in a couple of years, or just short of a couple of years. I think that has certainly helped at the same time with the election, put a lot of, impetus around share prices going up across banks and stocks like that. So, look, my main concern around interest rates is whether it will have the effect long term in the future that it's had previously. Reserve banks are having a much harder time trying to keep the economy growing. Interest rates is one lever that they have. I think other issues need to really come to the fore for economies to keep growing at a really good rate.
Okay. So, the domestic markets are probably overshadowed by the Trump tariff war between China. Is that something that changes the fundamentals of the appetite for overseas equity investment?
I don't think it does. I think people have to realise that. I was sort of having this conversation the other day with a couple of advisors that America for a very long time has been and continues to be the number one economic powerhouse in the world. We've now got, I suppose, circumstances or situation where China is pretty much number two and is really challenging the US as the economic powerhouse. So I don't think that the trade situation that we know, I just don't think it'll be resolved tomorrow. Yes, I think some sort of deal will be done and trade will continue to a certain degree, but I'm pretty sure, probably for some time now, that it's sort of like it is competing for I suppose supremacy and power and economic wealth around the world. I can't see them not almost competing or fighting with each other in a range of different ways. I think both of them need to be careful about what ramifications it does have on companies. The US has had the benefit, and so has China, particularly the US had the benefit of selling a lot of products and services to China. To really understand, there's almost double the number of Chinese middle class that is just getting wealthier and wealthier and will be consuming more and more and more. So the US will not want to hurt that too much, but I certainly think there's some core things that Trump is doing, probably needs China to pull back on, at least renegotiate some terms. But I think from an investment point of view, you've almost got to put that noise aside and just say, where is it that I can invest to still benefit from those types of opportunities? Investing in the US investing in Asia and around in a diversified manner is still the way to go, because all those different companies are still benefiting in some way of products and services that are being offered from China. So look, you've got to be wary of it. You're going to get tweets every day, messages every day of news, this, that and the other. You've got to just sort of put it to the side as best you can and just, look forward.
Right. So at Beulah, as investment managers, I guess the question is, where do we see the best use of capital there?
Look, the big focus we've had over the last 6 months in particular, we have been investing overseas and certainly continue to promote clients investing overseas. But I think one thing we've tried to do over the last 6 months is continue to increase clients' investments to what we describe as alternative type of investments. And if you remember one of the last posts we did, one of the, I reckon, most profitable investments for the risk that you take, for the foreseeable future, particularly in Australia, is in lending and private credit lending. You'll see, if you're a part of the firm, you'll see some investments from Qualitas, from Metric Credit, all providing really healthy 5, 6, 7, 8% income. And look, that's off the back of all the major banks here in Australia all deciding to pull out of lending, or a lot of lending. And essentially, as investors, we can be now the bank and we can lend to people. So we've been choosing our investments and really been, I suppose, implementing that pretty slowly. So if clients can get that level of income, maybe with a little bit of capital growth in this really volatile world, we think that's a really good place to be.
Okay. Okay, so closing in on 30 June, it's reporting season. What should investors be looking out for?
I think it's one of the biggest issues I think you'll need to face with companies that are coming out reporting is whether they are organically growing or not, or whether they need to look for other opportunities. Global growth and Australian growth is slowing, therefore companies need to be exploring a range of options. So the biggest thing for me to be looking at this reporting season is how a company's growing and how they're going to do it. If their organic growth is really slow, then we'll see some really slowing down. The other interesting thing I'd really like to watch, I think, is we have seen a number of tech companies that are now listing on the stock exchange. It'd be really good to see how well they're travelling. Stocks like Afterpay, as an example, have done really great stuff overseas. So it'd be great to see if they're continuing that success or not. Thanks everyone for this update for June. We look forward to the next one. Hope we gave you a little bit of insight here from the team at Beulah. Thank you.
Thank you.